Everyone, and welcome to the Governance and Audit Committee of Wednesday, the 9th of November 2022. I'm glad to say it's dry at the moment and not too wet for us, so hopefully it'll be like it when we finish at the end of the day. If I could take some apologies for absence.
Apology from Councillor Kelly Roberts.
I also have an apology from Councillor Alan Jeffrey.
Thank you very much.
And I also have an apology from Ness Young, the Director of Corporate Services, Chair. She just relayed the message on to me. She's travelling elsewhere at the moment.
Okay, thank you very much. We were expecting Ness, so thank you for that, Ben. Any other apologies? Thank you. Disclosures of interest, please. Any disclosures? No. Okay. If we go to the minutes then of the meeting of the 12th of October, page by page for accuracy, and any comments then please stop me. Page 1, page 2, page 3. And I have one addition to that minute in respect of item 51 on joint presentation coming out of COVID. The last paragraph of that section says the chair thanked officers for providing the presentation and noted that the findings were positive, but what I said, the sample size would require further expanding in order for the committee to have assurance. If you can just add that in. Yeah. If there are no other comments or queries, can I ask if we can approve these minutes, please? Thank you. Thank you. Hands up on that. Okay. Thank you very much. If we can now move on to the Internal Audit Monitoring Report Quarter 2. And I understand Simon Cockings, the Chief Auditor, is on annual leave, and I'd like to welcome Nick to stand in for him. Thank you once again, Nick, for standing in for Simon. If there are any questions that are raised after you present your report that you feel you can't answer in the absence of Simon, then please say so, and then you can bring the answers back, or Simon can bring the answers back to the meeting in December. But hopefully you'll be able to answer them all. So go ahead, please.
Okay, thank you, Chair, and good afternoon, everybody. So just the one report to present for me today, which is agenda item number 4 on page 4 of the reports pack, which is our quarter 2 monitoring report covering the period the 1st of July to the 30th of September 22. As members are aware, this report is for information only, so I'm only going to go through the highlights of or highlight the main points listed in the report, and any questions I'd be happy to answer at the end. So, okay, if members can and officers can turn to page 4 of the reports pack, and as you can see, this document shows the audits finalised during the period and any other work carried out by the team. So, top of page 5. 2.1, a total of 16 audits were finalised during the quarter. The audits finalised are listed in Appendix 1, and they show the level of assurance given at the end of the audit and the number of recommendations made and agreed. Appendix 2 then provides a summary of the scope of the reviews during the same period. 2.2, we have a table which show the assurance levels awarded for those reports, and you can see of the 16 reports finalised, 8 were a high assurance, 5 a substantial assurance, and 3 a moderate assurance. 2.3, a total of 84 audit recommendations were made, and management agreed to implement all 84 of them, which is 100%, and against our target of 95. 2.4, all recommendations are classed and classified as either a high risk, medium risk, low risk, or good practice. An analysis of the recommendations, of those 84 recommendations, you can see in the table below. So 3 were high risk, 15 medium risk, 52 low risk, and 14 good practice. Moving down to 2.8 on page 6, just a bit of an update. Staff sickness within the team has continued to be quite significant during the quarter, and that's really rolled forward from Q1. And at the time of compiling the report, the 2 members of staff continued to be absent due to long-term sickness. However, we have received confirmation that one of those members of staff will be back within the next week or so, which is good news. Moving on to 2.9, in addition to the sickness, I did discuss our 2 vacancies that we had in the team due to 2 people leaving the section. Those have been filled, and again, good news is that within the next 2 weeks, we'll have those 2 members of staff joining the team. Moving down to 2.10, at the top of page 7, we discussed the possibility of agency staff and whether we were going to consider that. That's gone back to Simon, the Chief Auditor, and Ben, the Director, to discuss whether we could entertain employing any agency staff. That isn't the case at the minute, and we will continue to review this throughout the rest of the financial year. But hopefully the need for agency staff has been slightly alleviated because we've got 2 new auditors coming in, and hopefully the employee who was off sick coming back in the next week or so. Down to 2.11, 3 audit reports were issued with a moderate assurance level, and the following tables below just provide brief details of the significant issues which led to those services receiving that rating. Now, we do have officers present today to give committee an update in relation to destination let-ins, and for the other 2 moderate reports listed, Rechargeable Works and Western Bay, officers will be present in the next committee meeting, which is scheduled for December. So I'm not going to go into too much detail there. Moving down to page 11. Follow-ups completed in Q2. We do normally present our follow-up report for our standard audits after this monitoring report. However, this document now will be put back to December's committee meeting due to the high number of items on the agenda for today. So we'll give an update in December on the follow-ups. And lastly, 3.3, there were no audit reports with a moderate assurance level rating followed up in the quarter. There has been one followed up in Q3, but again, this will be presented to committee after Christmas. If we move down to the appendices, Appendix 1, you can see a list of the 16 audits finalised in the quarter. Appendix 2, a summary of the scope for those audits and any key findings that we've picked up. And Appendix 3, which is on page 18, is our annual plan and the status of that plan as at the 30th of the 9th, 22. Okay, and that's that. And any questions?
Thank you very much, Nick. If we can have any questions, please. Do you want to take the ones online first? Any hands raised? Not seeing any hands raised, but Councillor Mike Lewis.
Yeah, page 8, and we got Monterey's just above that. There's 1, 2, 3. There's 5 items that says needs to be invoiced. Well, most of those, all the 5 items are 6 months prior to, they're out of date by 6 months. Why are they taking 6 months to needs to be invoiced? So it hasn't been invoiced as yet. So, and 6 months has gone by. Why is that?
Because Simon's not around. Ben, are you, and the lead director's not around. Ben, are you able to comment on that?
Sorry, Chair, I can't give a quick update. Oh.
Sorry, yep, you do it, Nick.
Yeah, sorry, Chair, I can give a quick update. Obviously, this report will come to to committee in December, and we will have officers from that service. But at the time of doing the review, we were informed of some historical issues with the lack of staff resources. So that's the reason we've been given when we recommended these high risk areas, really. So we are working with the service, but until really we get them back in December to give us a bit of a fuller reason why those invoices haven't been raised and chased and so on, that I think it's probably best for the officers to give committee an update in December. But the initial, as I said, the initial reasons were the lack of resources within that section.
Ben, anything to add to that?
I just follow up and echo what Nick said. I think the comment made is a valid one by the member and by Nick. We need this service to respond. I would take it as fair warning has been given by the committee that they would expect there to be significant officer assurance that action has been taken.
Thank you. Councillor May?
Yes, thank you, Chair. Can you perhaps advise us, the committee, as to what is the actual timescale for issuing invoices? Is it a week, or is it 2 weeks, or a month? Can you just, if you can confirm that, please?
And shall I come in first, Nick? It's an operational matter for individual services, but the expectation is invoices are raised and billed in advance wherever possible. I think it would be more reasonable to address those matters if you're not satisfied with the full update and action report that comes back next time. But I think you're right to make that point, Councillor, as well. But the expectation is invoices should be raised, if possible, in advance. There should be no delay. There will be occasions where there'll be a delay, but I think the previous councillor comment holds as well. And I reiterate my previous advice. I think the service has been forewarned that they better have a good explanation next time.
Thank you.
Thank you. Jeff, Councillor Jeff Jones.
Yeah, it's table 8 again. It's the invoices, unpaid invoices. It's going back to 2008, 2009. I know there's only one there and so on. I don't know what sort of reason there actually is with regards to such a long outstanding invoice, but then again, you go back to 12, 13, 13, 14 and so on. Is there some sort of write-off, period, where we either write these off or come to some sort of conclusion, because we're actually carrying that debt for, how many years is that? There must be 24, or not, sorry, is it 24? Yeah, 14, I forget my maths. I know. 14 years. So is there some sort of period that we, call an end to this invoice, considering it's not a huge amount, really?
Again, if I come in first, the auditor has reported what they have found. Some of those items will already be statute barred, which I think you've already come to that conclusion in terms of normal process of what you can enforce after six years. I'm not immediately aware of any special exemptions or dispensations for rechargeable works unless they've got charges on activities. But I think, again, that is a point that's well made. The issue of debt and arrears is a long-standing one at this committee. Again, services are responsible for their own debt raising. They're responsible for engaging with trying to collect the money, and ultimately there is a write-off process which goes through audit and myself. But until we get to that point in time, the auditors are reporting what they have found, and clearly debts relating back to 2008, whilst the point you've made is they are relatively small in value, it is certainly far from ideal that they're still skulking around in there. I suspect many of them are completely and utterly already unenforceable. And I think, again, that is added to the list of things that I think committee's given forewarning to the relevant service, looking for assurance when it comes to an update next time.
Yeah, thanks, Ben. And just to add to that, yeah, as Ben has mentioned, there is a write-off process. We did speak to the service at the time. They have already put some measures in place. Staffing time is planned to be spent to review any unpaid invoices wherever possible to reduce the debt. They will be updating the AR system as they go along, but until really they come into December and give committee a full update on exactly what's happened, I can't really comment any further.
Thank you both. Julie Davis. Need to press the button. The red hand.
Thank you, Chair. In the absence of Simon or the managers for the services, I don't know whether, Ben, you'd be best placed to answer this. A worrying trend is emerging in relation to financial control in respect of income. We've had a number of moderate reviews of accounts receivable, and the accounts receivable team have assured this committee on several occasions that they've done everything they can to raise the profile of income collection throughout the council, and they've also assured us that that they have worked with individual services for them to understand what their responsibilities are and what procedures are. So I would like some assurance going forward that the situation is going to improve in respect of income collection.
So I think there are two parts to that. Again, the first responsibility is the service, and that will need to be addressed by them coming and explaining in full their responses to the December committee. The second part is a long-standing and valid matter that has been raised by many members. I think it is also in order that the relevant service area, accounts receivable, under the head of the service centre, will also have to bring an update report. And it's an inevitable consequence from that, because you rightly expressed concern repeatedly at this committee. I think to give some credit to the officers concerned, they will continue to remind of the competing priorities of the Oracle project and other matters, but I think particularly your emphasis on the financial control concern is a valid one, and I think it would be perfectly in order for you to be seeking that assurance at the next cycle from the relevant service for precisely the reason you've raised.
Thank you.
Are there any other questions? Yeah, Julie.
Sorry, I've got a second question for Nick. At the end of Q2, you reported that 6 out of 16 level 1 and level 2 reviews have been finalised or are in progress. Given that you've had high levels of sickness absence and also resource shortages in the recent past, what mitigating actions can be taken to ensure that that you're able to deliver a full audit opinion at the year end?
Thanks, Julie. Yeah, as you've mentioned, we are, since we've had the sort of vacancies and sickness, we have directed our limited resources towards our tier 1 and tier 2 audits, which are the cross-cutting and fundamentals. So you can see in the report the audit plan is as at the 30th of the 9th. Some of those audits have moved forward, particularly the fundamental ones. We do have a number of them now in progress. So yeah, the resources are directed towards those because they are the high risk and the sort of the ones that we need to complete to provide assurance. But as soon as the auditors are back and in post, and hopefully one of the employees is back from sickness, we can start to ramp up getting those jobs done. But at the minute, we are directing our resources towards the high level tier 1 and 2 audits to get them completed as soon as we can.
And could I ask, are the new members of staff, are they trained auditors or will they have to be trained up?
One is, yes, and the other has previously worked in audit. So we're hoping that there shouldn't be too much training, and we'll get them up and running as soon as possible.
Thank you. And I've got a third question around detail on a couple of audits. So rather than putting you on the spot, I'll email those to Simon for him to answer when he's back.
Yeah, that's fine. That's great. Thank you.
Thank you.
On the back of the cross-cutting audits that you've prioritised, Nick, I can see you've got a corporate governance review in there. Can you ensure for me that in that scope you include performance, please? Recognising that we are soon to receive a performance report, it would be very helpful if we could have an outcome of your opinion on that performance arrangement before we have that report, or at the same time even as we receive that report. I'm not sure if that's doable, if you can link in with Simon, because that would be December. And also there's within the cross-cutting is the Oracle Cloud Fusion project. recognising the escalation costs there that I know have been under scrutiny committee. I'm just wondering how soon you'll be able to review that arrangement as well, please. So I'm aware there's additional controls being put into play. It would be helpful for the this committee to have assurance that they are working effectively now.
Okay, yeah, that's fine, Chair. Corporate governance, we usually leave until later on in the financial year anyway to complete. The Oracle Fusion project is slightly more tricky, with us to try and get in there and get some work done. But, we liaise with the relevant staff to try and find some time, of course, on both sides that we can get, maybe an update to committee on how that's going.
Thank you, Nick. I appreciate that. And thank you, Ben, for assisting. I'm not seeing any hands up. No. That report's for information. So if we can move on to the next report, which is, I understand, Sue Reid, you're going to help present your reviews of the moderate report on destination lettings. So can I welcome you to the committee? If you can assume that we've read the contents of your report, but if you would point the committee to the relevant sections and key issues that you want us to note.
Thank you, Chair. But I think I'm going to hand over to Jamie, who's going to begin, and then.
Okay, thanks, Sue. Yeah, if you can all hear me, my name is Jamie Rubridge, Strategic Manager on behalf of Tracy McNulty, the Head of Cultural Services, joined by Sue today. Assume you've all read the report, agenda item 5, in regards to the destination lettings. Just to give a context and background, which isn't included in the background of this report, it focused on the lettings of 80 beach huts at Langland and 63 caravans sited at Mumbles Hill Caravan Park. Just further context in terms of that, in terms of the number of customers that are dealt with on an annual basis at both of the cumulatively across those two sites is probably in excess of 200, raising revenue between 220 and 240,000 pounds per annum for the authority. So that's just a bit of context and background. The report came out as moderate with 6 recommendations that we've.
Sorry, Jamie, can I interrupt? For some reason, you've gone very faint.
Oh, I'm very sorry. Can you hear me better now?
A bit better.
Oh, I'm very
Thank
sorry.
you.
Yeah. 6 recommendations, one of which was high risk, another medium risk, and in particular focusing rightly on the particular issue with the Mumbles Hill Caravan Park, where we had an unprecedented issue with not being able to contact one of the license holders at the site over the course of the period, which accumulated to a more significant debt than we'd appreciated and we'd have liked. However, we'd like to put to the committee that this was unprecedented. It's now been resolved. The member of the public has been removed from the site, and action is in place to collect that debt from him, and the plot is now ready to be reallocated to somebody on a waiting list. The other action in there in terms of a medium risk was in regards to taking due care over invoices which are issued, which was accepted, and again over the period, due to remote working and some staffing issues similar to what Nick has just mentioned, there were some resource issues which have now been resolved, I'm glad to say, and we don't anticipate that being a problem further. All other actions in the report were agreed, and as per the report sets out, are implemented or in the process of being implemented. Thank you.
Okay, if we can open up for questions, please. If I can take those that are online first. I'm not seeing any hands up. Any questions from Mike? Councillor Mike?
Yes, thank you. Thank you, Jamie. Within the update sheet you've given us now on the findings after the 6 recommendations, 2 of them were previous recommendations. Can you inform us as to why these weren't perhaps monitored or followed through properly so that they didn't get flagged up again on this audit? One is obviously relating to licenses from licensees.
I think, Councillor Mike, it's a part of that is due to over the period that the audit covered was we had a fundamental shift into the working from home. The current process for sending out and returning the signed licenses is via post. That isn't ideal, obviously, when through the periods when there weren't staff able to be in the office to be able to collect and retain those licenses. So that's part of the issue. We've now been exploring and will for next year implement an online license where it will be verified via DocuSign and issued via email. So that should significantly improve the overall return rate, and there's no reason why it wouldn't therefore then be 100% with everything logged electronically on the system.
And that system will obviously be actually monitored, will it, Jamie?
Oh, absolutely, and I think this is where we're moving towards, Mike. We've done a considerable amount of work in terms of the caravan park. It's not quite so straightforward, but just to give the audit committee a bit of an update, now all of the Langland Bay huts are issued via an online portal where applications come in online. The draw is done virtually using those allocations that come in, and then payment is made upfront via the online portal. We're not quite there in terms of the caravan licenses, and it is a slightly different system because of the values that we're talking about and the way that they are paid over the course of the year at the caravan park. Because some of the bills are in excess of 2,500, it requires a payment plan to be set up ordinarily with accounts receivables, therefore that debt is paid off by the license holders over the course of that year. And the affordability level of being able to pay that upfront every April that doesn't make it feasible for that option of an upfront payment like we have got with the Langland Bay Beach Huts. But we're working towards a more online system which ensures that compliance and effective monitoring of officers who are now working differently, and there's no doubt about that.
Okay, thank you, Jamie.
Okay, any further questions? Bill Sharman?
Thank you, Chair. Yes, I do have some questions for the service managers on this report. Perhaps I could start by just focusing on the exceptional instance that you've highlighted there, where I do understand you've taken recovery action. But I think it'd be really useful for the committee to understand better what process you have in place in the event that there is an unpaid license, but the license holder continues to occupy the site. Because frankly, and I speak on behalf of members of this committee, I hope, we do find that 4 years to be unacceptable, and surely, and not, I guess, appreciating fully the effect of the COVID impact. Nonetheless, 4 years is a long run before the corrective action was taken to remove the physical infrastructure from the site and clear that ready for reletting. So certainly I would expect a much sooner response to be taken by the council in the event that a plot is unpaid, certainly in the year following or after the follow-up actions taken. So the first thing I think, please, is just to outline the procedure you have to ensure that a situation like this doesn't reoccur. And then, Chair, I do have a second question. Thank you.
Sue, would you like to take that one?
Yes, absolutely. Thank you, Councillor. We have in place, and it was unprecedented, and without going into any detail because it's very delicate, and obviously we've been it's a difficult one to actually explain to you. But the person was uncontactable, completely uncontactable, and we were only made aware of their circumstances a couple of years in, and it was as I said, they were uncontactable. But basically what we've put in place now, and there wasn't a hard credit control or any aspect of recovery that was already in place because it had never happened before. We didn't have anything in place. So the coordinator worked very, very closely, and I will say this and give very thanks to our legal and accounts receivable team to actually set up a process where we could actually literally get onto the site and actually tape up the caravan to ensure that nobody accessed it. We were confident that the tenant couldn't access it because they were uncontactable, and they weren't around, or they weren't using the caravan. So it was a very difficult one because that person, like I say, we couldn't have that communication with them. So basically the caravan was taped up, and then when it came to an actual situation, and out of the blue, the tenant did get in touch, and we understood then where we were able to begin the legal proceedings, and that happened fairly quickly into those sort of the last 6 months of that period, if you like. So we've actually got a process now in place that we all understand, including legal colleagues, ourselves and accounts receivable, whereby we can actually put something in place and actually have that asset and give a deadline via the courts, I must add. And we had a deadline that we were actually going to receive that asset if they didn't meet that deadline. But as I said, they actually did come to light, and we were able to get that removed and put a payment plan in place. And we can confirm to the committee that the payment plan has begun and the repayments have started coming in. So going forward, we do have that. We have a plan in place going forward, if you like, for hard recovery.
Very good. Thank you for that reassurance. Chair, my second point is something that I'd like the service manager to consider, maybe even comment on now. The provision of caravan site and also beach huts is a non-statutory service. It's a discretionary service of the council. It's very useful to get the information up front about the size of the revenue flow. At 240,000 per year is not insignificant. But in the context of best value and ensuring that we do get the best return for the investment of resources at the disposal of the council, has there been, or will there be, a kind of performance review or best value review to say, is the council best placed to continue to operate this facility? Have they considered the operation of the facility or jointly with Langland's facilities through a third party, through some kind of concession? Is this something that the best value review might identify as being capable of disposal with a return or suitable investment return to the council through that route? That'd be useful to know. Thank you.
Are you able to reply to that, Sue, or do you need?
I will answer that in part if I can. I think the Langland Bay beach huts, to an extent, have gone under that sort of regime previously, whereby they've been put under a long-term lease for a number of the huts, which resulted in reinvestment into probably a third of the current portfolio, and leased those assets out following upfront payment from the leaseholders to repair, renew, and almost rebuild the huts. We are now at a point where all of those have now come to the end. So the council now is in ownership of all its 80 beach huts in Langland. So yes, I think there is absolutely an opportunity to re-explore that. I would suggest that just in terms of the facilities that are there at Langland, they are assets which are jewels in the crown, I guess, of the city. They're income generating and revenue generating, etc. So we need to have careful consideration about transferring any responsibilities to others that limits our future income generating opportunities. but also balanced against the risk of our need to continue to repair them. So there is a case to look at on both sides. I think with the caravan park, there's a slightly different angle to it in terms of the licenses which are granted are only for an annual basis, and that is quite different to some of the private caravan parks that you'll see across the country, where you'll get 10 or upward of 15 years in terms of a license. We do it on an annual basis, and my understanding of why we've always done it on that basis is because it allows us to keep our options open in terms of, you know, future responsibilities and future use of that land in particular as a corporate asset. So we're not tied into anything, just to close that off in terms of our future running of it. But as it stands now, it generates significant revenue, which goes to offset wider costs borne by cultural services where it sits for facilities that don't or aren't able to make the same amount of revenue.
Thank you, Chair. Very good.
Thank you. Councillor Leslie Walton.
Yeah, thank you, Chair. It's more a comment from what Jamie was just saying in the question. I'd be very loath for us to lose these assets. And from what you said, obviously things like Langland is going to be a jewel in the crown. And I think it would be probably detrimental to pass some of the responsibilities to a third party. I think what we've got to do now is trust up to a point what you've now put in play to ensure that in future you're not going to have issues over not receiving the money for licensing. And perhaps the best thing, in fact, rather than sort of come up with a suggestion, oh, let's palm it off on somebody else, let's ask you to come back in a few months' time and see if the plan that you've put into place has actually turned out and is working. Thank you.
Thank you, Councillor Walton. Any other questions on this matter? No? Can I just thank you both then for coming to present this report and also to answer those questions. If you wish to leave now, you're more than welcome to leave.
Thank you for your time.
Thank
Much
you all.
appreciated.
Thank you all.
We can move on to the next item on the agenda, which is the Corporate Risk Overview Report for Q2. Richard Rowlands, you with us?
Yes, Chair. Thank you, Chair. So the report provides an overview of corporate risk during the second quarter of the year. You can see in paragraph 2.2 that all of the corporate risks were noted as having been reviewed at least once during the quarter. And also within the same paragraph, we can see the other changes that took place during the second quarter. So at the end, we've got 6 red risks in the corporate risk register. No new risks were added to the register during the second quarter. 4 corporate risks were closed or deactivated. No risks were escalated. 1 risk was de-escalated, and 4 risks had their right status changed during the quarter, and reasons for all of that are recorded within the register for audit purposes. We have a snapshot of the corporate risk register as at the end of Q2 as an appendix to the report on page 40. So this sets out the corporate risks, which are the overarching risks that affect the council as a whole. And these are the risks which are identified and overseen collectively by the corporate management team each month. And each of the risks has a member of the corporate management team identified as a responsible officer. And a guide to the various headings within the report can be found back on paragraph 2.3. And then finally, within this report in paragraph 3, starting on page 36, this paragraph notes that the annual review of the corporate risks has been undertaken by the corporate management team during the second quarter, and the outcome from that is summarised in the table in paragraph 3.2. And I should point out that that this is the initial outcome from that review, which is being worked up, but will need further consideration by both CMT and Cabinet, and will be kept under review as the Council finalises its budget and corporate plan for the start of the new financial year. Thank you, Chair.
Thank you, Richard. Before I open up for questions, Richard, I had a conversation with Ness Young this week, and she mentioned that she was working with you to enhance this report to give further clarity and information around your risk assessment methodologies and presentations. Do you want to expand a little bit on that before I open up for questions?
Yeah, sure. So one of the key things that we're working on is incorporated within the reports the concepts of inherent and residual risk. So inherent risk is the risk that we'd expect to see when a risk is first identified, and then the residual risk is the risk that would be left once the control measures have been identified and they're taken effect. So that's something that is a gap within our current corporate risk management framework. So it's something that we're looking to introduce, hopefully within the current system, but if not in the current system, then certainly in the one that we're currently building at the moment.
Thank you, Richard. If you can open up, can I go online first, please? Any hands up? I can't see any hands up online. Any hands up? Councillor Jeff Jones.
Thanks. Sorry, Richard, perhaps I'm being a bit dim here. With regards to the identified risks, I can understand some of them, you know, the risk 159, which is the financial control medium-term financial plan and sustainable Swansea. I can understand, you know, with the current economic climate, you know, there's, shall we say, new risks and ongoing risks there. And the next one then, risk 221, the availability of domiciliary care. I can understand, you know, with especially the threat to, shall we say, people actually providing the service and people remaining in service, you know, to provide especially domiciliary, domiciliary care. But then actually moving on to, and they've got completion dates, you know, project completion 2023 or whatever. And then we actually go on to, sorry, if you bear with me, local economy and infrastructure. It's got, you know, city deal. It's one of the things actually down there is attract investment across the region and highly skilled and well-paid jobs. Now, we've built the infrastructure, but we haven't had the, you know, the highly skilled or well-paid jobs. And it's got a project completion of 31st of December. Now, we're certainly not going to achieve that by the 31st of December. So is that something that's going to be reviewed, that project completion? Because this project is not going to be completed until it delivers what it sets out to do.
Yes, that's right, Councillor. I think that there are different aspects to the City Deal project, different milestones, and likewise in terms of the control measure in the detail, there'll be different aspects of that as well. So I suspect the project completion date is for a particular aspect of the control measure, and that will be then reviewed as we get near to that date, and that projected completion date then will be updated accordingly.
Yeah, I'm glad you clarified that, because you know what the statement there is wrong, you know, with that completion date.
Thank you. Richard, can I suggest you go back to Martin Nichols to clarify the statements in that control measures section, so it gives crystal clear it is a specific element of the project, so it'll be easier for us as members to address. Councillor Mike Lewis.
Yes, and could you also ask him how many jobs have been produced by the developments that we've ongoing developments in City Deal, because I find it rather distressing that you say there's no jobs, and I don't know where you get your figures from.
Yeah.
It's actually, I know how many jobs.
You do. 24 jobs.
Can we
Sorry,
Can we have
Chair.
that
I'm sorry,
detail?
Chair. I completely dispute that, because the last time I was in the arena, there was hundreds of people in the arena that were working in the arena. So I do feel that Martin Nichols should confirm how many jobs have been.
Can I
Thank you.
can I request that Martin look at this section of the report so that the questions raised by members today are made clear in that paper, please? Okay. Councillor Leslie Walton.
Yeah, just a quickie on dates. Richard, I assume that they are reviewed regularly because timescales do change because things evolve, don't they? So I would have thought those dates are absolutely written in tablets of stone.
No, that's right. I mean, we ask that, you know, the corporate risks are reviewed at least once every month. And as part of that review, then reviewing the progress on the control measures, which includes the projected completion date, is obviously one thing that, you know, we ask people to do. And we also ask every responsible officer to review the likelihood and the impact of the risk every month as well, because any changes in the control measure obviously affects that.
Thank you, Councillor Walton. Councillor Jeff Jones. Sorry, Councillor Mike White.
Yes, when you're going back to Martin, Richard, would it be possible as well to have the break of how many apprenticeships has been given out in the projects that's going on currently going on across the city and county Swansea, please? Can we have that information? Ask Martin for information as well, please. Thank you.
Okay, I've got no hands online, and I've got Julie Davis and then Phil Sharman.
Thank you, Chair. Many of the RAG statuses haven't been reduced by the control measures being applied. So it's welcome for you to say that you're going to add inherent and residual risk to the risk register, but will you also include risk appetite?
That's something that we can look at, Councillor. But I think the issue that you highlighted there, I think the residual and the inherent risk assessments, if you like, will certainly help with that. But yes, certainly we can look at that as well.
Thank you. Phil Sharman.
Thank you, Chair. Richard, I do appreciate receiving your quarterly report. It's very helpful. And yes, I will look forward also to the residual risk, because at the moment we do have some what I call persistent risks showing. And as Julie's indicated, it's unclear at the moment as to how effective the control measures are in managing those risks and bringing them down to an acceptable level. So that'll be interesting to see. If I could just ask a question about the relationship between the corporate risk register and the directorate level risk registers. In today's papers, we have social services and finance in agenda items 7 and 8. And if you compare the risk schedules that are included in their reports with the corporate register, there are some inconsistencies, Richard, which you may explain are due to timing differences. So, for example, the fraud risk is showing as de-escalated in your report, and yet it does appear in the finance report as being a corporate risk. And similarly in social services, there is the COVID risk and the WCCIS risk, both showing as being corporate level risks, but I don't think they now appear in your corporate register. So if you could just explain the interface between directorate and corporate, that would help. Thank you.
Yeah, I think the issue that you've highlighted, as you quite rightly say, is to do with the difference in terms of reporting dates. So the report that I'm presenting here is a snapshot as at the end of Q2, and it's likely that the other the other sort of snapshots that you've got are just of different dates. But the relationship is that we have 3 levels within the register, 3 main levels. So we have the corporate level, we have directorate, and then we have service. And each part of the register is all one register really. It's just that each part of the register is managed differently. So in terms of the relationship between directorate and corporate, risks can be escalated and de-escalated to the various registers. And we do that through the various meetings that we have within the council. So if a risk is to be escalated to the corporate risk register, then that's a decision for the directorate management team to decide whether or not a risk should be escalated. And likewise, if one is to be de-escalated from the corporate risk register, that's a collective decision then by the corporate management team. So there's that relationship between them. And yes, I think the issue that I've highlighted is just simply a matter of timing between the different reports.
Thank you, Richard. Chair, I do have some sort of more pointed questions about individual risks, but I'm happy to pick those up with the service directors at agenda items 7 and 8.
Yeah, that's fine.
If you're happy with that.
Yeah, that's fine.
Thank you.
Are there any other questions for Richard? Richard, can you stay on, please,
Sure.
until the directorates present their reports, just in case there's something you wish to add with that, if you don't mind.
No problem.
Thank you very much, Richard, and thank you for presenting that report.
Thank you.
The next item on the agenda was due to be the Social Services Directorate, but because of the pressures and the meetings that Ben has, I've agreed for Ben to come before David Howes. So thank you, David, for cooperating with that request from Ben. So can I now welcome Ben first, please, for what would have been agenda item 8, but is now the next agenda. Ben?
Thank you, Chair, and yes, my thanks to Dave as well for accommodating me. I tend to be very brief on my report per se because it's an information report. And I start by saying it's an interesting one, isn't it? This is the first time poachers turned gamekeeper or vice versa. Until this year, I only advise as a statutory officer on other directors bringing reports. So this is, as I indicate in the report, the very first one for finance as a standalone directorate. So we're the newest directorate. It can only be an initial baselining position. But as you can see in the summary report, it's small in net terms, but rather large in terms of fingers in pies when you gross up those net budgets across the various activities we do. And also I have fingers in pies in terms of the whole raft of controls across the whole council, as well as now individual duties in my own right. I would perhaps start by referencing the risks, which quite rightly have already been identified. One of the things I would wish to remind is that because of COVID, I was the only directorate that did take advantage of a relaxation on the risk register of not keeping the controls as up to date as they ordinarily would be as a result of COVID measures. And I had hoped to end that at the end of September. But unfortunately, what was a COVID crisis and redeploying resources seems to have gone into a general cost of living one in terms of support to others, and also a looming budget crisis that affects all in the public sector. So I may need to reconsider my intention of switching off some of the light touch arrangements, and that may also go some way to addressing some of the comments that Phil Sharman has raised in terms of apparent inconsistencies. In terms of taking as read that you've read the report and the baseline position, I thought it probably best to take a step back and just talk about some high level principles of things which are important. There are 3 big things that really at the end of the day get me the sack, and ultimately the bits that will be of particular concern therefore to my colleagues, to you as an audit committee and the wider council, and that's the statutory accounts, the financial controls in year, and budget setting. So starting with the statement of accounts, we start in a position of relative weakness, having had 2 good years of doing the accounts by the statutory deadline brought forward to the end of May. You are aware there are long-standing protracted issues, primarily as a result of the local reworking of 20 years worth of historical backlog issues, and also an ongoing issue around a statutory override for infrastructure assets. I am pleased to advise that one of the reasons I'll be disappearing as soon as possible with your forbearance is I have read 2 versions of the draft main statement of accounts, and I will be on to my 3rd and final version from this evening. So I am confident that a copy will be signed by myself and distributed to the external auditors by the repeatedly agreed revised deadline at the end of the week. And my thanks to Gillian Gillette, who is on the call, and Audit Wales forbearance on that. We are nearly there. I'm just doing my final 3rd proofread through because I still want to apply high standards. still means we are very markedly late, and it is an indicator of distress, but indicator of distress for a couple of reasons that I've already fully briefed the committee on. Just linked to that, I do have 2 other sets of accounts where I act as either the Section 151 officer or the responsible financial officer. Port Health Authority, which is a multi-purpose authority, the audit is all bar concluded by the signature, and in similar vein on the pension fund, for which summary entries are in the main accounts, and they'll be the only ones that come to this committee because the pension fund operates Section 101 committee powers. That one has also been effectively concluded, and my thanks to Gillian for the receipt of the agreed ISA 260 between external audit and management. So notwithstanding it's been a difficult year on statement of accounts, the end is in sight for me, albeit I'm appreciative that that is further work for the external auditor to do, and nothing is officially over until the Auditor General is happy to put their imprimatur on the accounts. In terms of controls, I want to sort of reference a couple of bits. You've all audit control and the audit update you kind of routinely get from the embedded stuff that I and my teams do anyway. And as Nick referred to earlier, we have had some gaps and absences, and we've kept them vacant, but we've made appointments to post. So we have been running relatively fallow. But for me, it's does it meet the minimum sufficing requirement of the overall control environment? And if that was imperiled, I would have considered agency spend, but at this stage I've held off for the other reason on financial control, which is, again, I'm now wearing 2 hats. I have got a financial control responsibility for the council as a whole, and do I think I have robust, rapid, accurate reporting mechanisms in place that flag up if council is under or overspending? I would say absolutely yes, and I've indicatively so from the previous 3 years will be very quickly focused on underspends. There were no surprises to Cabinet and Council, no surprises to this committee, and a material £100 million plus added to reserves. And notwithstanding the hold-ups on the statement of accounts, I've still ensured that staff are focused on doing the outturn reports and getting certainty, subject to audit, on the important revenue reserves and the cashback nature of most of those revenue reserves. Having said that, I've satisfied in terms of control in one sense. I'm secondly satisfied in terms of control as an individual director, because I expect to lead by example and live within my budget, even after the unfunded pay award, which has now been agreed and will be implemented in November. It is not meant as any criticism of my colleagues, but they are not in the same fortunate position. The other 4 directorates were a mixture of either starting to overspend before the pay award or certainly all overspending after the pay award. It's the unfunded nature of that causes some problems, and this committee and scrutiny and cabinet have had well-trailed advice from me as to the consequences for the base budgets going forward. So wearing my wider control hat, I am perfectly happy that I'm aware of what's going on and reporting appropriately, rapidly and robustly through the appropriate channels. But I don't directly control the spend. And as I say, not wishing to be overly critical of colleagues, they have a much harder task. They're bigger directorates with competing priorities, and trying to maintain services in the face of unparalleled and unprecedented cost pressures is really problematical for them. But I am at least satisfied that I have reporting mechanisms and in-year solutions reported to Cabinet. My concern is more about the future position, and that brings me on to my final bit, which is around budget setting. And again, some of the risks that are reflected in the risk register, which, whilst not being fully kept up to date because I relied on reducing my reporting detail during COVID, I have a robust, well-established budget setting process with relative continuity of fellow chief officers and relative continuity of cabinet members, who are the core in terms of ultimately reporting back to council, who will make its decisions on budget. But it goes without saying that budget setting for this coming year, 23-24, I've said it to cabinet, I've said it to scrutiny, it will come as no surprise, I'm saying it again today, will be the most challenging that I can ever recall in over 30 years of working in local government. And I think every treasurer is in the same boat. There will be a lot of what are euphemistically called difficult choices, and some of those difficult choices will start to firm up as we get the national autumn budget statement and await the Welsh Government budget settlement. So again, I am satisfied we have robust mechanisms for pulling together the overall pressures and possible savings, but I'm also acutely conscious that the scale of magnitude this time round is likely to be especially challenging for every director, including myself, likely to be challenging for this council as a whole, likely to be challenging for every council and for every public sector body. And to some extent, like many of the things we do in year and some of the choices that members will ultimately make on the budget, medium-term financial plan will be prioritising what to do, what not to do, and what we can get away with just doing suitably enough. Not the best of positions to be in, but it's the reality. I've had frank conversations with external audit. You know, they're right to hold us to account, but they do recognise, you know, that the reality is difficult choices and trade-offs and prioritisation do have to occur. So I thought that narrative was perhaps helpful around what's not in the report, on the three big things that define whether I'm doing well enough for the authority and whether you are suitably assured, both in terms of what is written down, but also what it manifests in reality. And that reality is going to be really sorely tested given the real pressures that I think everyone on the committee recognises, and will not be surprised by the comments I've made. I don't think I have anything else to add other than to again reiterate my thanks to Dave and yourself for allowing me to bring the item forward, but I'm happy to attempt to answer questions either in the report itself or anything that's been prompted by my more general update on the three big things that define the overall cycle of the finance year. Thank you, Chair.
Thank you, Ben, very much for that. It's pleasing to hear that the accounts will go on Friday as well. Any questions from remote first? I'm not seeing any hands up remotely. Any questions from around the table? Phil Sharman.
Thank you, Ben. Very good. What I'll do, if you don't mind, is just focus in on one or two of the areas you've mentioned. And perhaps I could start then first with the budget setting, which is your risk ID 160. It's on page 120 of our report. So with that context and seeing it shown there as a red risk, notwithstanding Richard's point about we are unable to see the impact of the control measures, so we don't know whether you've been able to manage down that. But according to what you explained in a narrative, you're seeing this as being particularly testing this time. Is this a risk that you may expect to be escalated to the corporate register, given the difficulty that you anticipate in framing a budget for the year, which will be 23-24 going forward? And I guess adjacent to that, perhaps I should just pick up a couple of others. You can answer all three together. On the accounts, good to hear that something's coming through. Your risk number 162 on page 122. And this could be a function of what you mentioned there, that registers have not been kept as up to date as you would have wished. But I'd certainly like to see in the risk register on 122 a bit more detail about the more recent accounting period. So I see it goes back now to, I think, 17, that should be 17, 18, or even 16, 17. Right through to 1920, but we don't have any information currently on 21-22 or 22-23. No, sorry, on it'll be 20-21 and then 21-22. A bit early for 22-23. But yes, Ben, I guess this is one of the casualties of that relaxation, but it'd be good to get that up to date. In particular, what it's showing there is more about reported outcomes. In other words, what you were actually able to achieve in those years, rather than the control measures as such, although I do see those are generically noted at the start about having a proper timetable and so on, so that's all good. And then just to close out, Chair, if you don't mind, the third one, Ben, which I'm interested in, is risk 191, and that's actually, I think, about internal audit. So Simon may wish to play in on this one, and that's where, if there is a risk to the delivery of the plan, it's on page 128. I see that any concerns in relation to resource that might impact the delivery of the plan are raised with the Section 151 officer. So that's the FD, that's you, Ben, and also the Governance and Audit Committee. Now, I noted in the earlier report from Internal Audit that there were concerns around resource, and I would like to see something appear in here about the practical impact that's going to have in this year, this current year 22-23, and reflecting on what Nick was saying about how you're prioritising currently the level 1, level 2 audits to try and manage that position through to the year end so that the Chief Internal Auditor can form a reliable opinion. So look, there's 3 risks I've picked up there, Chair, which I'm sure Ben can just chase through fairly tightly, but that's the kind of thing I'm interested in on behalf of the committee. Thank you.
Ben, do you want to respond to that?
Yes, I'll respond rapidly to each. I think they're all perfectly valid and right. And you're right, Phil, the latter 2 are casualties of my decision not to update the control measures, relying on that COVID dispensation. It does mean that that middle one is very long in the tooth, and I do accept that one. The point at which I do update them, I will need to, on the statement of accounts, reflect the much tougher environment we've experienced for 2021. And especially for 21-22, 2021 having a qualification and 21-22 being significantly delayed. So I think that is fair comment. It'll be done when I get round to it, given I'm meant to be flicking the switch back on and updating it. And I do accept that some of them are weak. They're not really control measures, they are outputs. I think that is fair comment for me to rightly reflect on. Rest assured, Simon does raise repeatedly with me in terms of both audit coverage and the need, if necessary, for additional resource. I would have been primed, ready to deploy agency if we hadn't made inroads in terms of the appointees that Nick has referred to. I don't at this stage believe that the overall opinion is imperiled, but if I got to the point that Simon felt it was imperiled, I would be looking to deploy spending resources short term to give further assurance to the committee, because it's a pretty fundamental control. I find myself slightly conflicted because I go back to the point I made, which is I like to lead by example and make sure I do underspend. And you know, I am the directorate that is likely to underspend irrespective of the pay award, but sometimes it there's leading by example, but you know, there's no point overly beating oneself up and holding too tight a purse string if it does run that risk. So I think it's a valid point. Both of them do need updating. The first one is an interesting one. I'm retaining at the moment. Clearly, the risks are heightened. I think there's a couple of things around the setting of budget. I do remain assured, because I will remind you in terms of the training I've given to new members and to new audit members, these are going to be incredibly difficult times going forward, but this authority has a proud track record across the piece. Doesn't necessarily always follow everything the Section 151 officer of the day does, but does have a consistent track record of listening to the officer advice, and when the chips are down, having to make the right difficult choices. This is going to be a year where it's going to be tested particularly so, but given the past history indicates that members across all parties' persuasions in council have listened to and weighed the advice when they ultimately make a decision, it is my judgment view at the moment there is not a need to escalate it fully any further, but it is a heightened risk that faces all councils, and that's the reason why I particularly emphasised it in my overarching summary. But you're right, the biggest casualty has been not updating it as frequently as I'd have liked to have updated it, and it is something I do need to chase through in due course when it gets a bit quiet over the next few weeks or months, which is only said slightly tongue-in-cheek, given I will breathe a sigh of relief and at least get the statement of accounts off. But I am in deep in detailed budget mode for the next few weeks. It is on the to-do list, but it becomes matters of priority. But I do take everything you've said on board. I think they're absolutely valid points that the lay member that Phil has raised. Thank you, Chair.
Thank you. Any other Julie Davis?
Just a quick question, Ben, on the report. You state that the newly formed Finance Directorate is responsible for audit provision, internal audit provision. Can you give some assurance that the governance arrangements are in place to ensure that audit can still retain its independence and objectivity?
In a short answer, I can, because other than being set as a new directorate, nothing has otherwise changed. The Chief Internal Auditor, whilst managerial and operationally reporting to me, retains his independent right to report to committee, independent right to report to the Chief Exec, has unfettered access to the audit chair at all times as well. So although the directorate has been newly formed, nothing has changed otherwise in the management and professional reporting lines to me and to the others. So I think you were assured previously, so you should continue to be assured, notwithstanding a new directorate has been formed. Cutting to the chase, effectively a subdivision of one directorate has become a standalone directorate, but other than that, very little has actually changed in terms of operational or professional reporting lines. So I think you should continue to be assured of respecting the individual boundaries and professional reporting lines. And I have no doubt that Simon acts entirely independently of me when he has to.
Thank you.
Thank you. Councillor Mike White.
Yes, thank you, Ben. Yeah, can I just say, yeah, you know, as I say, it's difficult, you know, but obviously we've clearly had, you know, a good indication because of going through 10 years of austerity that have given us good guidance on how we can manage budgets, and I think that that'll sort of help the council, you know, and in going through those 10 years of austerity that have obviously put us in good stead, that we are capable of managing the budget.
Thank you very much. If there are no other questions or comments, then can I thank you, Ben, for presenting. I know your time is precious for you at the moment, so if you want to leave the meeting now, then please do so.
Thank you, Chair, and thank you, committee, for your forbearance as ever. Thank you. I will do so. Thank you.
If we can move back then to the Social Services Directorate Internal Control Environment, and welcome David House to the meeting. Thank you, David, again for allowing Ben to present before you. I do appreciate that. I know Ben does as well. So if I can invite you to present the paper identifying all the issues you wish the Governance and Audit Committee members to note.
Yeah, no problem, Chair. I note Ben's initial comment that he would be brief. I will definitely be brief in my presentation, but happy to take questions. I suppose the overall context of the report that you've received, same as last year, is look out, you know, health and care has been dominated by the impact of the COVID pandemic, and we continue to be severely impacted by the repercussions of that pandemic and our recovery of health and care services, you know, in this coming year. You know, we, you know, even at the moment, we continue to have spikes in COVID, which are impacting on both our most vulnerable in our population and impacting on our workforce. So if you had pretty much anyone before you talking about their experience at the moment, they're not certainly experiencing it as COVID is over and we're back to anywhere near to where we were pre the pandemic. So it's worth having that reminder of the context in which the report is before you. Having said that, I do think overall, in the same way as we were able to give considerable assurance last year across, you know, the range of areas that the committee are interested in, it still remains the case that overall we are able to give a high level of assurance around those, you know, broad governance functions. I'll probably pick out 2 or 3 areas to note in particular and to update, I suppose, from when the report was written. And as members of the committee have already noted, there's by the time a report is presented, some of it's already out of date. So certainly some of the risk stuff has been significantly updated since the report was prepared and since the appendices were attached. So I'll turn to risk first of all. We have a significantly heightened risk looking forward now in the area of safeguarding and the council's capacity and ability to maintain arrangements to ensure the safeguarding of, or effective safeguarding of our most, you know, the most vulnerable members of our population. It has always been a corporate risk. it's always been, you'll have a heightened status on the risk register. Note the comments earlier about you can't really see the differentiation between what difference do the control measures make. I think some of that will play out in the, certainly in this area of risk when Richard's innovations are implemented. So you'll be able to see some ups and downs, but it'll always be at a high level of concern. But it's a particularly high level of concern at the moment in 3 areas. So one of them is the risks in relation to having a sufficient workforce, and that's across all areas of health and care professionals that contribute then to our overall ability to keep our population safe. But in particular, there are issues around our social work registrant workforce and our ability to recruit sufficient social workers. And in particular, that has a bearing on our ability to recruit sufficient social workers in the arena of child protection, which is an obvious area that we would want to be particularly resilient. And we are not particularly resilient at the moment, the same as no local authorities across Wales are particularly resilient at the moment. But that creates a heightened risk and a heightened risk looking forward. The other area does link to workforce, but it's more about our capacity to deliver the required amount of care. And it's come up already, I think, on the discussion, one of the committee members referenced. They understand the risk around domiciliary care and capacity in domiciliary care because they're hearing that information in the various briefings that I give either to council or to the scrutiny performance committees. So we have a particular deficit in our workforce capacity for delivery of domiciliary care. Again, same as every other local authority in Wales, but that's having particular detrimental impact. That workforce deficit does exist across residential care, nursing care, that safeguarding risks, because if we are not able to provide sufficient care to those who have care and support needs, then clearly it becomes increasingly difficult to safeguard those individuals because you're not able to do the very basics. And then the third area that's a particularly heightened risk is around placement sufficiency for looked after children. So having the right number and the right type of looked after children's provision, both residential, is particularly stretched again for all local authorities in Wales because it is an issue in Wales. So those 3 areas that all have separate risks along with a load of others, either on our Directorate Risk Register or have been escalated to the Corporate Risk Register. So domiciliary care, for example, was escalated from Directorate up to corporate level. Discussion I had with CMT this morning was that we would strengthen the overall corporate safeguarding risk and naming those particular areas of concern, which are the most heightened areas of concern at the moment, and then refresh the control measures linked to those, linked to those particular areas. Safeguarding. The logic of doing that is that it will make it clearer to the council overall and to this committee who take an interest in that, the interplay between those different risk factors that overall combined together escalate the overall concerns about resilience around protecting the most vulnerable within our communities. So I've reworked that. CMT have signed that off today. I need to brief the cabinet members accordingly, and then we will upload that new updated risk to the corporate risk register. And then at the same time, I will de-escalate some of the individual risks that are now captured within that overall risk register, only back down to directorate level. So we will still have individual risks across a range of areas, They will be managed, and you know, the detail around those particular control measures and the monitoring of their effectiveness will sit at a directorate level. But the interplay, I suppose, or the interconnection between all of those different risks will be captured and monitored by the corporate management team on the monthly basis, as Richard has already described. The other risks that I'll note, and it plays into the performance area of the reported update. Last year, you would have heard a lot about the concerns in relation to implementation of WCCIS, the new national performance system that it's hoped that all local authorities and health boards will adopt. We had significant concerns linked to national fragility of that arrangement. That compounded and made more complex our implementation locally. That led to all sorts of concerns about our ability to have effective performance management and oversight and the reporting elements of that. I think as a result of those concerns, you committed committed the audit team to undertake a particular audit around those arrangements, which came back with considerable assurance around the improvements that have taken place. Those improvements have been maintained, and that led to me some mix of, you've got different timing of when that's happened, the reports before you, but that led to me de-escalating the corporate risk around WCIS back to a directorate level, and I'm in the process of reassessing the level of risk around actually the levels of concern now, given that we've had a sustained period of stability and the national plans that are in place we have much more reassurance about. So I'm not anticipating that that risk will re-emerge. So again, there'll be further changes to that. That has helped strengthen back to the position that we were pre-implementation of WCIS, of having very strong performance reporting arrangements across our directorate. We are now back to at least that level, which is reassuring, and hopefully that's reflected in the feedback that we get from the two dedicated performance scrutiny committees that there are already in place overseeing performance management reporting and delivery across our directorate. So that's a positive. And the final bit I just wanted to highlight, only because I kind of picked up that there were perhaps some misunderstanding or misinformation, not necessarily in this committee, but in the council generally, potentially, but it might have been the case that it was in this committee as well, around the success or not, or the effectiveness or not of debt recovery arrangements in our directorate, particularly in relation to debt recovery linked to the recharging of the health board. So historically, we did have concerns about those arrangements. Historically, we did have significant levels of debt that have been accrued over many years, and effectively we were just in dispute with the health board about, did they owe that money or not? Was it a reasonable charge? Was it a reasonable invoice to have raised, etc.? All of that historic work has been cleared, and that means that at any given time, the level of debt or level of outstanding invoicing between us and the health board is now routinely between the level of £2 or £3 million each quarter, whereas in the past it was up £10 million plus. So it's now routinely every quarter £2 or £3 million. It never really changes from £2 or £3 million because that's the size of the invoices that are raised. That's the amount of business we are doing back and forth between us and the health board on a quarterly basis. So it's the fact that it always is that there is £2 or £3 million worth of debt appearing on the accounts receivable list isn't a sign that the things aren't working. That is just business as usual invoicing and recharging between the two organisations. All of that has really good monitoring arrangements in place, including, as I referenced in the report, a monthly meeting that I chair that oversees all of this stuff to make sure that we're not going awry, we're not going back to the historic difficulties that there undoubtedly were. So as long as it stays at that sort of level, then that is a functioning arrangement that is working. It's all accounted for in year. Basically what happens is it takes about a quarter to go through the process of getting sign off in both our organisations for those invoices to keep getting paid. So it takes about a quarter. By the time first quarter has been settled, you're into second quarter and you've already raised second quarter invoices. That's effectively what I'm describing. You may find some other debts that the council has or recharging that's taking place between the council and the health board, and they may be big figures. So an example, and I don't know where we're at with that, but an example was the funding of all the work to build the field hospital, for example. Now that's not to be mixed up with the social services directorate recharging. That's nothing to do with me. That's not something. So if there are big other health council debts, it's not a sign of dysfunction in our directorate. Our directorate arrangements are working well. That's probably the areas I wanted to highlight, and then I've done the same as Ben, Chair, in that I went on much longer than I intended, but I'll stop there and happy to take any questions from committee.
Thank you very much, David. If I can go online first, any hands up online? No? Councillor Mike White?
Yes, thanks, Dave. As I say, it's nice obviously to see that is come together now with the health board as in paragraph 5.7. We are now getting to sort of pay, for the services that we support them with. In regards to 5.5, Dave, in regards to charging the organisation use the council care services, and obviously you said obviously this isn't done by you, but it's done by the corporate finance charging team. Have you got one of your team linked working alongside the finance and charging team so that things are actually kept apace and monitored?
Yeah, absolutely. So that monthly meeting that I chair, that is a meeting of directorate staff, so the staff I directly manage, and that area of function that is in Ben's area of the business. So his heads of service attend that meeting, and I have to say, there's lots of things that we've tried over the years around moving functions that used to sit within the within the social services directorate and the finance and charging. We had that function that we were directly managing. Of all the functions that we've transferred corporately, the one that has worked best has been the transfer of that finance and charging function to join up with Ben's bigger section. But it only works for the very reason that you've described. Those heads of service that are now responsible are very engaged in working jointly with us. And then we, for governance purposes, I then meet with them on a monthly basis to check that that is all still working well, and that everybody's playing their part. So things we need to do within the directorate to improve things, that we're open and transparent about that, and take forward any improvements we need, and vice versa in the area that Ben is overseeing. But that's the one area of all of the things that over the years we've tried and have either gone to the corporate centre and then come back, and which tends to happen as organisations reinvent the wheel over the years. That one's worked particularly well. So I pay credit to to Ben's team that are overseeing that function. They're doing it really well.
Could I just make a comment, Chair, as well? It's a very comprehensive report, and seen, so social services, one of the main services we're providing. But can I say, the detail within the report is excellent, and social services and Dave's team need to be commended on how they pull things together. So well done, Dave, and your team.
Thank you, much appreciated.
Councillor Jeff Jones.
Yeah, thanks, Chair. I mirror Councillor Mike White's comments there. We've gone through, I think the council has gone through, and especially perhaps social services. On 2.3, you've actually got our capacity and resilience to managing the most challenging of circumstances continues to stand up remarkably well. Now, I think Ben actually intimated that there are going to be additional budgetary pressures. I think last year we had quite a good settlement. You know, people's budgets actually went up. I don't think that's going to be the case. We spoke earlier about the domiciliary care, you know, our private partners, you know, they're under the cosh. We've got shortages of staff. But I think people tend to sometimes forget about the private individual, the carers. You know, they, I think, are doing more these days than they ever have. And they are going to be asked to do more probably in the next year. What sort of, you know, to me, this seems to be a risk, really, that people will say, oh, God, no more, type of thing. What will we actually put in place to assist these carers?
Yeah, no, you're absolutely right. And that fragility that I described around domiciliary care, you're right to say that is predominantly in the independent sector. We've got your comment about people will say enough's enough. Well, that's what's happened during the pandemic. We've lost literally hundreds of staff from that bit of the workforce because actually there, you know, the harsh truth is there are easier and better paid jobs elsewhere, whether that's in retail, whether that's in hospitality, etc. Clearly, there's only so many levers that are available to the council on its own to try and address those fundamental workforce weaknesses. You know, some of that work, and it is taking place, needs to be driven and supported at a national level. So implementation of things like minimum real living wage for social care staff, that is a helpful innovation. But if you think about where that level is getting to, you know, £10.50, something like that, actually to attract staff into these really challenging and increasingly specialist roles, you're probably looking in the order of £13 an hour, really, to get back up to a point where we'd have sufficient staff across the piece. And there's a big gap between what really we should be looking for as a nation in terms of valuing, you know, and properly building some resilience into that area of the health and care system. You know, a gap between everybody probably recognises that. Well, I say probably, I think everyone does recognise that's what's needed, but there is a significant fiscal gap, isn't there, when we're looking at the likely sort of settlement that Welsh Government are going to have, and then the likely settlement that councils are going to have. Those debates are ongoing. You know, the bit that we can do is absolutely, you know, quite bluntly brief both officials and ministers about the harsh reality of the gap between, you know, current workforce capacity and what's actually needed to support our, as I say, our most vulnerable individuals. It's then leading to other things. So, you know, lots of what's happening at the moment is individuals who could be supported in their own homes are much more likely at the moment to find themselves in an interim, you know, residential care or nursing home placement. We do currently have capacity in definitely in residential care in Swansea, not so much in nursing care, but in residential care. We do have capacity, and we're using that capacity sensibly, in that it's very necessary to make sure that some individuals who can't be otherwise supported and aren't going to be safe without you know, care at home, it's sensible to make the offer to those individuals and to use that resource that is available. But it's not ideal. It's not what individuals want. It's not what our optimum model for adult services described. What we described was, over time, we would be able to support more and more people at home, not just through domiciliary care, but a strong reablement offer and other wellbeing initiatives. And nearly all of them are currently being undermined by workforce deficits. Hence that description I gave of that we need to significantly refresh and be frankly, be more blunt about, that overall safeguarding risk for the council. And that clearly then will inform, difficult decisions that Cabinet will need to make once they know how much how much money is available in whatever budget settlement comes. But you can't magic up money, as Ben has been quite, frank and blunt about. And, harsh truth is, all of the indications are at the moment that despite all of the policy intent from Welsh Government, all of the words that have come through over the years from UK Government, all of our ambition that we've rightly described as a council, there's going to be a gap between what we would like to do and the resources that are available to deliver that. I'm about as bleak as Ben on that, I think, Councillor and Chair.
Okay, thanks.
Thank you very much. Have we got any other queries in the room? Any questions or queries? Julie Davis.
Thank you, Dave, for that comprehensive explanation of where social services stands. You've answered most of my questions, so thank you. But I would like to home in on the risk ID 305, which is social worker vacancies. And you've already mentioned that, but looking at the current control measure, there is only one control measure, which is rolling vacancy adverts for social worker and senior social worker posts are currently active. So that's obviously not working. So are there any other control measures, more creative measures that you could possibly consider?
Absolutely, and you're right, that description underplays the steps that we have taken. So that's a failing on our part to describe all of the things that we've been doing, particularly over the last few months. So that was a weakness in our work. I tried to acknowledge in the report that this was still an area for development, particularly our descriptions and specificity of the control measures. So we are working on that. In the remodelled safeguarding risk or reframed safeguarding risk, I've got about 10 in there around workforce, and they are things like we will be using agency social workers, we will be over recruiting what we're describing as differently qualified staff where we can't get registered social workers. That will include consideration of a strengthening of some business support functions to release some of the burden on where we've got social work gaps, etc. So, to try and protect the social workers that are left. It includes the work that we're doing in the region and with the health board around overseas recruitment. So a whole raft of things, and including within that are things like the wellbeing support that we have in place and will strengthen again to try and encourage the scarce resource that we have left to stick with us. A bit longer term, there are things in there around our grow your own strategy. So that's again where we're recruiting differently qualified staff. We're then financially supporting them where they're interested to pursue the social work qualification. We've just launched a social work academy so that when newly qualified staff come to us, they work within at least for 6 months. They work within a more protected environment where they get additional mentoring support. The caseloads are managed. They don't have the high risk cases, etc. And then you get into other things like, again, one of the things we've had recently was a recruitment fair where we invited all third year students from across all of the universities in the South Wales area to come visit Swansea. We presented, showcased all of the different areas that there are opportunities to work in, talked about the academy, etc. So there's about 10 that are in that strengthened safeguarding risk.
Okay, thank you. And a question to Nick, please. There's a review of non-residential care in the audit plan? And would you be able to ask Simon to confirm that the business risk as described in risk ID 221 is covered off as part of that review?
Yeah, thanks, Julie. Yeah, I can certainly pass it on to Simon for you.
Thank you.
And hopefully we can include that in that review. Yeah.
Thanks.
Thank you. Councillor Leslie Bolton.
Yeah, I just wanted to add my comments to endorse what Mike White said. I think you and your staff seem to be doing quite an incredible job. And all I can say is, whilst the future looks grim regarding the budget, I can assure you that all of council will try and do whatever we can to mitigate the effects as far as we can. Thank you.
Councillor Bolton. Councillor Paxton Hood-Williams.
Thank you, Madam Chairman. Just to say, basically, obviously, from a scrutiny point of view, a lot of what David has been saying, we know full well. We're constantly looking at it, and he will know that as well as I do. It's something that deeply does concern us. Obviously, the staffing situation, as much as anything else, is the most important, I think. Not quite sure where to go with that one, David, because obviously it is a national, and I mean a Wales national and probably a UK national problem as well as just being a local one in Swansea. And we certainly seem to be coping with it quite well compared with other areas from what we heard from a scrutiny point of view. It's something that we will continue to look at. We're always looking at these areas and the serious areas that David has raised during scrutiny. As you well know, we've seen the scrutiny programme that comes forward, and that's why we work together, I guess. The other area which was a concern to us as the new computer system has gone in. Glad to see that is beginning to settle down now, because that was causing a lot of operational difficulties in terms of data wasn't being produced electronically and had to be produced manually instead, which was taking additional time on top. So it's very good to see that system is now bedding in, and certainly from a scrutiny point of view, we rely on performance figures coming through so we can look at them and question them, and the data coming off that is far more effective now than it was certainly a few months ago. I know there's a hiatus in scrutiny for a while because they changed the council during the elections for about 3 or 4 months, but now it's back up to the normal processes, and members around the table will know that full well. But certainly what David has been talking about is a lot of the things that we talk about in scrutiny as well.
Thank you very much.
Sorry, I should add, and we do appreciate the work that has gone in there and is going in there to make sure that we're doing everything we can in terms of safeguarding.
Okay. Thank you. I've got a couple of comments, but before I comment, any other questions? Phil?
Thank you, Chair. Yes, while David's with us, if I could just pick up 2 things. First of all, yes, I would be very interested to see, David, the impact of the control measures on those persistent risks you've identified. Probably the 2 to flag, and I know you've raised them, is the domiciliary care and the safeguarding. Those are showing on the corporate risk register. You've got them in your own report. At the moment, I'm unclear as to how effective the controls are in terms of bringing down those risks to an acceptable level. So we'll look forward to seeing that in the risk update going forward. The second thing then is in agenda item 4, and I think you were present in the meeting at the time, is where internal audit have looked at the Western Bay adoption arrangements and have identified some control weaknesses. Now, I think Nick said the service manager will be attending at the December meeting to answer points on this report. But while you're here, and given that you've raised in your own report at 6.1, 6.2, the effectiveness of internal controls, it does invite me to put to you the question as to how you see the control weaknesses that have been identified in Western Bay impacting on your own overall assessment. because clearly the two things that have been flagged in this report are that the Oracle system essentially has been tidied up after the invoices have been received. Clearly, those work orders need to be placed ahead of the invoicing rather than added afterwards to square it up. And the other one is where you've got individual providers who are delivering service to the council of more than £10,000 each per year should be subject to a procurement process. And currently that's not the case. So David, yeah, your even if the overall comments at this time would be appreciated, and we can follow up any detail with the service manager at the December meeting on the specifics of the report. Thank you.
Yeah, I don't want to preempt the feedback from the service manager there. I think what you will hear is that there are some complicating factors in relation to the regional adoption service, and that some of the issues, it's not an excuse for those issues emerging, but some of the issues that arise come from the way we have decided to implement the regional service. So you've got effectively 3 local authorities all putting staff into a joint service, all with different terms and conditions, all with different overall governance arrangements. So some of what has happened is as a result of the integrated management team that is in place, not properly differentiating the different rules that are in, and that particularly I suspect has come up around the mileage issues, in that there are different rules in place across the 3 councils, and then the Swansea rules for Swansea staff haven't been applied correctly. The other issue around the procurement, I don't want the my overall assurance view to suggest that we still don't every so often come across issues, because we do. We're a massive organisation with hundreds and hundreds and hundreds of different teams and services, etc. My overall assessment is in previous years there would have been a lot of concern about we're not good at all in following the rules around procurement, etc. There's been a massive improvement, and the main area where I would say we've strengthened is that I refer to in the report the creation of that People's Commissioning Hub, a focus of which is one of the areas of focus in that meeting is compliance around recommissioning of services, recommissioning properly, the timescale for recommissioning services, etc., and the extent to which we, in that work plan, which is a 2 or 3 year work plan, the extent to which we're still using waivers or not in order to buy enough time to get through that. Now that covers the bulk of our activity, but I couldn't say to you, ever that we absolutely know that something doesn't get missed somewhere, and hence part of the reason that it's absolutely necessary and helpful to have that independent audit function is to help us spot where things aren't working in the way that they should be. I think you'll also hear, but again, I don't want to preempt the feedback from the service, from the service manager of that service, is that some of the things that happened in terms of hang on, we're just going to do something. We're just going to do something because we have to respond to something here and now, and we haven't got time to go through some of the processes that we ordinarily would for good governance purposes, were linked to COVID decisions. Again, I'm not using that as an excuse. I'm just saying that that was the context. So it was absolutely the case that at different stages during the pandemic, we would say on a daily basis, just do that. You have not got time to follow processes. Now, I'm not saying, again, not offering it up as an excuse, I'm offering it up as context. I think that will emerge in the discussion that you then have when you question the service manager. Now, clearly what would be really bad habits, and it may be some evidence of that, and we need to nip it in the bud, is that things that we were doing in extremis during the pandemic don't become organisational behaviour and a kind of lack of rigour and good governance going forward. And there's, you know, perhaps some evidence that had slipped into some of those processes in that particular team. When we've looked at it, you know, when we come back with the action plan for that particular service, we are making sure that the lessons from that are being used to inform other, you know, teams and services across, just as an added check of we haven't developed any bad habits elsewhere as well, if bad habits is a part of what's gone on. But as I say, you know, I'm giving an overall view as to why it doesn't impact on my, you know, my general sense of have we made significant progress or not across our massive directorate. I still hold to the view that we have, but you will need to explore the particular issues that emerged, obviously, in that service, and seek assurance there, but also seek assurance about, you know, have we looked elsewhere to make sure that those things aren't creeping into the system in other teams and services as well.
Thank you. Thank you very much, Dave, and thank you, Phil. Just a couple of comments from me, Dave. And the first one is it's really pleasing to see that Care Inspectorate Wales are satisfied, and the comments you make on paragraph 7.2 that you've remained to have strong and effective arrangements in place throughout in a very challenging period. So I think that echoes what some of the councillors have said today about well done, you know, to the work that you've been doing, because that's an independent assurance that this Governance and Audit Committee can take. So I'd be looking forward to seeing that report at some time, because I note it's verbal at the moment. I did have some comments around the safeguarding detail, but I hear that you've now updated the whole section of that and there are additional controls in place. And I'm just wondering, Richard, are you still with us?
Yes, Chair.
Yeah, I'm just wondering, once if you get opportunity before you present the next time, if you could bring that directorate section of the risk register into your report rather than ask Dave to come back again, just to give assurance that what Dave has said about the additional controls that have been put into play be conceived for that next period of the meeting. And for any of those sections around the domiciliary care, the WCCIS particularly, and any other areas that we've raised, if you can do that.
Sure, Chair.
I don't want to drag Dave back for reassurance, and I think we can take, as long as everyone around the table and online are happy with that. Do we need a vote for that? Okay, that's fine. If we can do that then, please. And just one final question I have, and that's with risk ID 297 about the community initial assessment. In the current control measures, the work was contracted out to assist with a backlog of 450 assessments. And in May 22, you say that the majority had been complete. I'm just wondering if they've all been complete and whether we're still contracting.
Yeah, so we've not particularly, not in the community initial assessment team now, they have been complete, but we are still using that particular agency to support us with some other work that was part of the backlog that was identified as part of this work. So it does need updating, Chair, to reflect that, and part of the review that we're doing at the moment will tidy that up and make that clearer. Okay, can I ask if you can make it clear that the quality of the work that they did has also been probed, and yeah, before you've contracted back out, so if there was any risks associated with that? Yeah, absolutely. I'll make sure that information is clear, but I can give you verbal assurance now. None of that work gets signed off by a manager or a supervisor that sits somewhere else. So we contracted out the work, but the sign off of that work and the quality assurance of that has remained with the responsible managers within the organisation, and no concerns have emerged. No overall concerns have emerged. That's not to say that, you know, every so often, same as any work that we do ourselves, that an individual might not come back and say, I'm not happy with the outcome of the assessment. But nothing that you would say would be a systemic concern, Chair.
Thank you. Thank you. If there are no other questions or queries, then I can draw that item to a close. And thank you, David. I appreciate your time. You know how sort of valuable your time is at the moment. So again, if you want to leave, you're more than welcome to do so.
Absolutely. Thanks, Chair. Bye-bye now.
We come towards the end of the meeting. The last two items on the agenda. The first one is the agenda item 9, which is the tracker report, which is where we have an opportunity to review actions taken since previous meetings. I've got nothing to raise on these unless any members have picked up a query on them. If not, I'll move on. Councillor Leslie Walton.
Yes, Chair. I'm a little bit concerned that the annual review of performance hasn't turned up today's meeting. I appreciate we've had quite a heavy agenda. Can I have your absolute assurance it will definitely be at December's?
I had a meeting with Ness Young on Monday, and she's informed me that that will definitely come to the December meeting. And she's also going to bring the transformation strategy and goals, which are going to Cabinet on the 17th, to the December meeting as well. So she's given me assurance that both the performance report and the report that we should have had from Ness this meeting will both come to the December meeting, and I'll be chasing that up.
Okay, thank you.
If there are no other questions on that one, can we move on to agenda item 10, which is the work plan, and we have the terms of reference attached. And I just mentioned with the terms of reference, SIPFA have just issued a new guidance for governance and audit committees, which includes the model terms of reference. I've managed to get a copy of that, and I've asked Tracy Meredith, our legal officer, if she could have a look at the model terms of reference to see if there are any changes that are needed. And I shared a copy with Debbie today. So hopefully that will go through the appropriate process within the committee and then come back to us for approval after it's gone through that stage. And I've also asked Simon Coffins, although he doesn't know yet, if he'd have a look at the effectiveness of this committee as well. In that same publication, there was just a 2-page questionnaire that as members we can all complete anonymously, and we can have some feedback on how we believe individually we've performed as a committee. It's part of the current terms of reference. We need to do it annually, but I think this will be a straightforward and relatively easy way of doing that. So Simon's going to do some work, and we'll have opportunity to feed into that and to approve that process at a future meeting. So I just wanted to update you with that. Any questions on the plan or the comments I've just made? No? I think that concludes the business for today. And once again, I thank you for everyone that's here in person. It's lovely to see some faces that we've not seen in person for a while, and also for everyone that's online. I really appreciate your support and your participation and your constructive challenge to officers of the council. Thank you very much and stay safe.